The Unlimited Abundant Show. Frameworks to being limitless in wealth, health, work, and life with your host, VB.
In just 15 weeks, develop your own wealth generation toolbox for an abundant life. This course is powered by Vineet Bolinchkar's 12-dimension investment toolbox, a precise stock picking methodology that takes your investment strategy for building unlimited wealth to the next level.
Hello, everyone, and welcome to another edition of the Unlimited Abundance Podcast, your frameworks to being unlimited in life, wealth, health, and happiness. And today we have some very interesting guests. But before we introduce you to them, I want you to share a lovely book that they have written. It's on stock markets and small cap stocks, which are potential multibaggers, and they have all 75 of them. And this is the book that they have written. So welcome to the show.
Thank you.
Arun.
Thank you.
And Soumya.
Hi.
And can you tell us more about this book?
Okay. So Vinayji, it so happened like we are in the market since last 14 years, and we are bored of the crap that goes on in the print media and electronic media.
Okay.
And since we were always connected with good guys, so we wanted to give them a platform where they would come out of their shell and put some notes for the public retail fraternity.
Okay.
So we, like me and Soumya, thought about it, and finally the book is here.
Okay.
And we have received overwhelming response for the same.
On last count you said 40,000.
Yeah, we have got like 43,000 PDFs to demand for these things.
Okay, wow.
And these became viral. So we are very happy, and based on the demand and based on the scene, we plan to do it every year maybe.
Yeah.
So one of the things that we thought initially while planning this was, see, a lot of books are written about Gyan and so-called what you should do in the market, how you should do it. But what about getting into people who have done it and how they have picked their favorite stocks? Right. So that was one of the things to make it really practical. So I think this is first of its kind where it is totally stock specific, and we are not even talking about Gyan Bazi. So Gyan is conveyed through the stock picking and the process.
But why 75 gems?
It's just a random thing which came in our mind. Rather than doing it on a basis of 100 or so, we thought 75 would make the cut. And fortunately, we have had like amazing 75 guys who are ready to share their passion and wisdom.
Yeah.
And that made the cut for the book.
And I believe next edition should be 100.
Okay.
That's the target.
So I have been through this book. They've gifted this to me, and you should also go and get one copy of yours. And if you would like to inquire more about it, you can always shoot me a mail or connect with me on WhatsApp, and then we will get it conveyed to wonderful guys. Coming to both of you guys, we have been speaking offline, but I would like you to introduce each other since you are business partners that go a long way.
Right.
So Soumya, tell me more about Arun.
So more than business partner, he's a brother from another mother.
Right.
Okay.
And we have been working together from last 5 years, I believe. And to be very honest, I can't remember even a second of communication gap that we had. So it's a bliss to have someone like him. And he's you typically think about Bengalis and then you remember those poets and artists who are totally mad about something creative. So that creative thing for him is stock market. So he would do crazy amount of reading, 14-15 hours a day. Someone who has gone to college and then quit it.
Okay. So you're a dropout.
By choice, because I believe his first company meeting was one day before he went to college, first class. And then they were teaching a hierarchy of management and all, and he was like, I'm meeting management, what should I go and learn about management? So a totally practical guy who has been in the markets from 14 years and met over 235 companies in his life. So connected to ground reality. A lot of stock picking is more about Scuttlebutt, meeting dealers, distributor, supplier. and a very interesting chap to be alongside.
So, you're 30 years old.
I just turned 30, yeah.
And you
Not a
have
good
been in the
feeling.
market since
15 years.
15 years.
Yeah.
So,
I've spent like half of my life in markets.
okay. So, 15 years, wouldn't that be young to be in the markets?
Well, not really. I always had the urge within to do something passionate, to do something creative, and I was bored to shit. When I used to see guys like my friends, who would be playing cricket or who would be trying to be models and all, I was like, let me be creative, let me do something on my own.
Okay.
And incidentally, dads those days, my dads or my parents, I basically hailed from a village called Hugli.
Okay.
So parents in those parts would always have aspirations that they are, that their sons or daughters, they should be proficient in English. So my dad used to carry that pink paper called Economic Times, and I was like, I'm hardly in class 7 and 8. Who cares about Economic Times? Who cares about reading English? I was like, okay. Whenever dad used to be beside, I would be like putting on the paper, would be glancing through few lines, and once dad makes his way, I'm like, okay, I'm done with it. One day it so happened, dad was like sitting beside me, and he said, whatever you have learned over the last few months, you got to answer me today. I was like, I'm dead for good. And then I was glancing that paper from last to front, and incidentally I came across those pink sheets, those Excel kind of cumbersome stuff, and I was like, this is what I was learning for the last so many months. And his question was, do you have any iota of idea what these are all about? I was like, no, but I really want to learn all this. I mean, I feel this is the real deal for me. He said, this is stock market, son. No matter what you do in life, don't even dare to touch it. You would be gone for good. I'm like, मुझे यही करना है. So that's how my journey got started, 15 years back. And it's been one heck of a ride over the last 15 years. Have I got many multibaggers, have got many blunders, but the practical experiences that I've learned by meeting 235 companies could be termed overwhelming. I mean, that is the real practical thing. It's a different ball game reading books and having that false sense of delusional knowledge and going by person and meeting managements and looking at the plan. It's a completely different experience.
Okay, and you can introduce Soumya to us.
Well, definitely, like again, as you said, he is more than a brother to me. And we met each other because I was a blogger. I mean, I had a blog called arunstockschool.com. And I started my blog during the year of 2007. And by 2014, I have had like around 90 lakh hits. So he was one of the reader. And he read a company called PTC Financial, I believe. And he eventually invested in PTC Financial. So we connected. I mean, I always would be like putting my numbers behind my notes. He got through the numbers, called me up, and I was like, this chap seems to be one interesting one. And I mean, I definitely went through his profile in Facebook, and he was from London School of Economics. I was like, wow, this is a college dropout, and a chap from London School of Economics is interested to meet that, village college dropout guy. So he called me up and I said, Aja, like come to my place. If you can, because I mean, my place is like pretty desolate, 100 kilometers away from proper Calcutta. But stock market itself is a taboo. So he came to my place, we got connected, saw the spark of him. I'm like, I really, really need guys like him. So that is like how we got connected. Coming back to the introductory part, he is one heck of a chap. I mean, we associate some guys, no matter what they touch in real life, turns into gold. He's one of its kind. He has been a class topper or state topper in class 10. He has been a state topper again in 12. He went to St. Xavier's College, topped there. He migrated to London School of Economics, came into the merit. He topped inter CA. I mean, you name the things and he topped, effortlessly. So I have the practical world. He has got the bookish world. So the amalgamation is pretty interesting.
So you more than made up for your school dropout.
Definitely. When I was pretty eager to know, the nitty-gritties of a great chap who would be studious and who would make the cut from foreign colleges. Once I met him, I do know how it works.
So you have seen in 15 years about 2 cycles, right? So 2008 to 2010, 18 would have been one cycle.
Right.
And you have seen a cycle from 2003 also, when it started out. Right. So you've seen more than 3 bear markets and maybe about 4 bull markets. 2003 to 7, 2009 to 12, 2014 to 15, right? And post demo, we have seen this big bull market. What have been your learnings from?
Well, to be honest, Vinitji, when I entered in the era of 2003, like I went completely blank because I didn't inherit a single penny from my dad. It was, and dad incidentally inherited few shares from my great grandfather. So I mean, dad possessed a demat, and those days I was just starting afresh. So what I can recall is whatever stocks one guessed, and it made it to the circuit. When from the time of 2003 to 2007, should we term the golden era of Indian stock markets, because people were just guessing stocks and they were like making 20% circuits. I mean, I can well recall Unitech was compounding at 20% a day, and people like made crazy amount of money. All the pan walas and these walas and that in the broking community was booming big time, and everyone was making money. We found that perpetual gold of something which would continue to create money. And when I consider the situation now and to that of 2008, it has vastly changed. The investor fraternity has improved for good. They are much more passionate. They seek to learn a great deal these days. And what I love the most is people like you. They are also trying to come and create some awareness, which I believe is the real need of this hour.
And when did the bug of fundamental investing bite you in this journey? So when you are making 20% a day, do you really care for fundamentals?
Well,
so how did you start getting into fundamental analysis, identifying stocks, picking stocks?
Well,
how did that all begin?
I mean, as I said, I had zero idea of what was like going on, the mad crazy run. And at some point of a time, probably in the year of 2004 and 5, when I just passed the 10th standard one, I was like, there should be a reason associated. Things can't be so superlative. Things can't move in the northward trajectory for eternity. So what I did was, there was this money control forum, and it was just starting afresh then. So what I did was, I approached that forum, registered myself, I had an ID, and I started penning notes. So got a lot of followers, and I can still recall I was ranked third, And what I used to do was like would pen some notes, would be putting my email ID and phone number so that like-minded folks who has got similar interests can come in contact. Through that way, I got to learn many mavericks, many amazing investors, and till date I have got like great rapport with them. So the fundamental bug that we are talking about started since 2004.
Okay. And Soumya, when did your interaction with him actually start?
So basically what happened is once I came back from London, so what I wanted to do was, I studied enough, CA, CS, whatever, finance ka keeda to tha, but what I saw is, I've done a lot of theoretical stuff. Now let me see what the real guys do. So what I wanted to do, I wanted to meet each and every guy who's into mid cap, small cap segment and has done really well. So I traveled across India. So whoever I knew is a good investor, I used to message them on Facebook or Twitter here and there and ask them, I want to meet and I want to learn from you.
So you actually went and met them up?
Right.
From
lot of people.
Okay. And you were stationed in
Calcutta. So as soon as they used to tell me that, okay, you can come, let's meet, I would straight away book tickets. I'll go there, I'll meet, I'll force them to open their laptop, show me how they research and all. So that way I met him as well. And so I remember the first day itself we got along pretty well. So it was more about craziness than stocks or studies. And ever since we have been in touch.
Good. And so you saw that big bull market and then you saw the crash of 2008-9. How did you deal with that?
I mean, I absolutely had no prior idea that this can happen. Prior to 2008, I only knew that market can go only one way, and that is up. Irrespective of some 10-15% corrections, which definitely happened amidst, I thought market can only go up. It's a machine of making money, and the guys who considered it as a taboo, should be mad as a march here. This couldn't be the case. Probably they are living in some delusion or so. And bam, 2008 came, and it hit me like nothing before. My portfolio tanked 55% in a matter of 6 months, and I panicked. I panicked and basket ordered my portfolio. Like I sold my portfolio that second itself. I'm like, okay, this is the different part. This is the second part of the coin. If I can endure this fall, probably I can last in markets. Else, I should change my profession to something else.
Okay. And how about what was your journey then? Or you were still studying?
No,
then?
I was still studying. I was probably, I think, in class 12.
Okay.
So I haven't seen 2008, but then yes, recent correction and all I've been part of since 2000. But a lot of my learning has come from my grandfather as well. So he was an avid reader and investor. He used to invest all his savings into equities, was holding all the good quality MNC names such as maybe Hindustan Unilever, Colgate and all. So I used to keep asking him. So annual reports would come physical at home and I used to ask him, what are you looking at? How do you see? So he would tell me that you see an ad on TV or you see something somewhere, go and check. My first investment was in class 8-9 and that also while interacting with my grandfather. Something came up and we used to live at a place where there were a lot of chemist shops, so we used to see baby food everywhere and coincidentally what happened, my one of my aunt had a baby and she was using Nestle food, and one of my people who used to work at office, he also had a baby and he was also using Nestle food. So I told my grandfather, nobody will compromise on this, so this should be a good company. So we were, obviously he made me understand as a child what it is. And I told him, okay, just buy one share for me. And that's how it started. So that basic thing of buy what you see came from my grandfather and the interest was always there. That is why even in terms of education, I used to be very excited that, okay, today we'll learn amalgamation or maybe how banking accounts are done. And it had to translate somewhere into getting into stock markets.
So he spoke of Nestle, okay, and you guys focus on micro and nano caps.
Absolutely.
Right.
Okay, so when you start off as novices, you typically gravitate towards the larger known names. How did and why did you focus on nano caps, or how did you come by it?
Well, I was a nano guy. I mean, at 15, 16, I myself was a micro guy. I was like, I would be inclined to look at the buds of the oak tree maybe. I being a nano guy, I being a miner, at 15, 16 I was a miner. I thought like, okay, let me glide in adventurous terrains. So that's how I said, okay, the L&Ts of the world, the HDFCs of the world, the Infis of the world, it's known to everyone. It's even known to my mate, probably. Who knows? But there would be companies which could be overlooked, but at some point of a time, if they are really doing good, if the fanatics or if the entrepreneur at HIMS are really genuine and passionate, at some point of a time, market would out to fancy them. And there lies the opportunity. So I tend to associate myself looking at companies which could be 10, 15, 20, 50x in the next 5, 10 years. The satisfaction of availing them, the satisfaction of possessing them gives me the kick and I work for my kick. Because I always wanted to retire by 30 and here I am happily retired talking with one of my idols.
So, and another thing I believe is in markets you have to find your advantage.
Okay.
So where is your advantage? Because in terms of small caps and micro caps, you know that okay, big funds won't look at them. FIIs can't buy them. They can't come with 10,000 crores of money and buy a 100 crore micro cap company or a 10 crore company. So that way, and another thing what we like doing was go on ground and try to find out about the products and all. Meet the dealer, distributor, supplier. So these things we believe that we could do better and create a niche for us. And that's how the journey for small and micro caps started.
So, can you explain to our viewers how you go about looking at a company? Let us say when you tasted first blood, which stock would that be?
Country Club probably.
Okay.
Well, I mean, with the due respect, I do know Country Club ain't a great company these days. But back in the days of 2000 and 2004, it had lot of lands and it was doing some dubious kind of shit which I'm not going to name now. But what I foreseed was like, okay, this company has got land and they were working in negative working capital. They had lot of advances and they were promising of giving the members a land after 22 years and in lieu they are collecting a lot of money. I was like, this shit can definitely do well because they have got that amazing salesman capabilities. And I bought company. I put hardly like $2,000 in Country Club at 26, sold at 1102. So I was like, wow, this kind of money if can be made. And the process itself could be repetitive. What I did in Country Club, I could follow up in something else called a Relax or a Kaplan Point or even a Symphony. But the first blood that comes to my mind, came from like Country Club itself.
And Soumya, tell us how you'll work together and what is your process in once you zero in on a stock. How do you go about it? Just a small kind of flow chart, if you may.
Right. So what we did realize by studying past multi-bagger stocks in Indian stock market is that just like people who work on technicals have their own patterns, there are fundamental patterns too in the market, which if you recognize and have a framework in your mind, you can maybe catch the story much before the actual numbers come out. So you can keep a track of that and buy that. So patterns such as say promoter change. So there's a chore promoter, so he's getting out, or maybe some very good MNC is getting into a particular company, buying stake, a small niche company, creating a brilliant space for itself in a very niche industry, or maybe a small company taking into market share of a larger one. So these are the kind of patterns that we constantly look forward. Once we do get such a pattern, then we try to do as much groundwork as possible. And our basic philosophy lies that we must focus a lot on consumption stocks in India because consumption is the biggest boom that is there. And the good thing about these stocks is that unlike cyclicals, you do not have to keep worrying about when to sell. We don't like to sell companies. We like to just buy and buy more at higher prices and then buy more if the company is performing. So that's how the whole thing goes.
And you guys kept mentioning about dealers, vendors,
right.
suppliers.
Right.
So that kind of scuttlebutt is very, very centric to your investments.
Right.
So what are the things that you actually do when you're doing the scuttlebutt?
So it is crazy. So sometimes what will happen, we'll call a company and they'll say that, okay, we are not interested in talking even after. So we try to push them that, okay, we have 50,000 people on app and some companies are not even interested in promoting and all. So what they'll do, they'll not entertain us like that. Then we'll try to maybe call again and say we are students and we are doing research on this particular field and we need your help. Maybe that works. If that does not work, we'll try and become businessman. And then we'll say that, okay, we want this space in your particular whatever business development that you are doing, and try to get into getting more information from them. Another thing that works really well is that network of people. So we focus a lot on getting connected with the right people in different spheres. So see, there are 5,600 odd companies. You cannot track all of them in all industries, all developments. So if you know right people, you have the network, you can straight away kind of connect and get inputs. So these are like gold mines for us if we can get them.
And this is what differentiates us. I mean, there's that thrill, which we fancy. We in camouflage of some PhD guys would be, moving here and there, would be talking to the dealers, distributors. They also get that feel, right? I mean, if we directly approach the promoters on the management, they would suck us on their stories, right? But if we approach, say, a dealer, distributors, they would be naive, they would be completely ignorant about stock markets, and you can have that gold standard information from them, which these days is a priority. Because if we are, honing our skills, or if you are fancying microcaps, whose market cap can well range from 5 crores to 50 crores, a screener or an annual report is not going to help you out, right? Because these guys are so ignorant about markets. So once you do that kind of due diligence, you get that confidence and conviction, right?
Although it's not possible, but our target before meeting the management is to know much more than them.
Yeah.
In terms of ground reality.
So then we can
that is what we target to do. So that, okay, we can go them and tell that this dealer of yours was giving this feedback, or this is the feedback we got about your product.
So it's a value addition, right? Like we being investors, we are also the stakeholders, right? No matter in India or even elsewhere in the world, if someone buys one shares of the company, he directly gets to be, say, in decimal owners, he would have some ownership, right? He would be the stakeholder.
He's still an owner.
Right. So he should also try to create value. We try to do that. If we get some feedbacks from the dealers or the distributors, we would be directly passing them to the promoters. they can do something about it. It's well and good, right? They understands it, sees it, and they would be also willing to value us. It's a win-win deal for everyone.
So finding multi-baggers or investing in stock markets is not only about screeners, annual reports, and ratios. It's all about going the extra mile.
True.
Taking the pains to get out there, getting off your butt, going and talking to different stakeholders, and forming your opinion about that.
Absolutely.
And in this analysis of yours, how important is business strategy, business model?
Definitely, because we need a business which would be a summarizing one. And along with that, we want that scalability, right? It shouldn't be like a small pond wherein a lot of fishes would like migrate and clamor about, right? So we want a field which would be scalable and which would be moving a CAGR of 20% every year, right? So there could be a company which is growing, which is beating that trend, which is rather setting that trend. We try to fancy those companies. I mean, say Havells, right? It was nowhere in the picture. Crompton Greaves was the sole leader. Havells happens to be the number one player, right? We talk about Exide and Amara Raja. Exide was there way before then Amara Raja came into existence. So there could be a scenario where the number 3 or the number 2 player comes and dethrones the numero player. That says the trend, right? So we try to fancy those patterns, and boy, we have done good for
So like he's saying, so one of the patterns is negative working capital.
Yeah.
So whenever we see that, okay, there's a company who's getting advances from its customers, then we are pretty excited about it, because why would someone pay advance? And then that is where the story starts. So even if it is a small company, you try to go to the ground, try to find out what is happening.
So I want to stay with this on you. You mentioned about finding the player who will come and challenge the domain leader.
Right.
How do you gauge that?
It's from the body language. It's from the body language of the dealers, distributors. If you just go and approach some XYZ dealers and you talk about, okay, there is an Havells, there is a Crompton Greaves, you have got the products of the best. So speak about this. What is the credit period? What is the margin that they offer? How connected you are, how aligned you are with the strategies. The feedback that you receive from them, along with the stuff of annual report and the manager interviews that you can watch from TVs and print media or electronic media, it gives you that feel, it gives you that sense, okay, there is some positive vibes, there is some difference happening, and along with that the operating profit margins that would also slowly inch up with the top leader or the top newer player.
Okay, so basically you're getting all this kind of confidence to go into it by this USP of connecting with the vendor chain.
Absolutely.
Interesting. And so how many you mentioned about 5,600 stocks in the universe?
Yes.
And how many are there in your portfolio?
Not more than 12, 13. We like to have concentrated portfolios because we do study a lot of companies, but then what has happened over a period of time is that your number of portfolio in the stock, number of stocks in the portfolio keeps decreasing. The reason being, there's a particular preference that every individual develops around certain kind of companies and what kind of companies you feel comfortable with, and you want them to be tracked very closely. So not more than 12 we'll have in our portfolio.
And what is the diversification in terms of businesses in the portfolio?
It's not like diversity. It's like wherever I would find value, wherever I would find my required confidence and conviction, I would be willing to step out. Even if it's like the same company or the companies from same sector, it doesn't matter. But what I fancy is like overlooked gems. Again, there could be a special situation, there could be a demerger, there could be the new guys who had suddenly come on helms, there could be a takeover, there could be a merger, there could be an appointment. I mean, you would never ever fall short of companies if you apply those patterns.
And so what are the checklists for stocks to be in your portfolio?
So first thing, as he told, that we are very, very company centric. So it's not that we are following a top-down approach, we follow bottoms-up approach. One of the recent examples being Medicam and biotech. So entire pharma industry was going through a lot of pain, US FDA pains and all, and we still invested in this company, were pretty confident, and that has also gone on to become 6-7 bagger in a matter of less than 2 years, wherein all the pharma companies are facing a lot of pain. So if the company has a lot of potential, we don't mind getting into it no matter what is happening in the industry. Yes, if the industry is also growing at 20-30%, that's a brilliant thing. But then a lot of it is company specific. And in terms of checklist, I told you that there are patterns that we follow. We want the scalability to be very high, the size of opportunity to be very high. We don't want companies where there's a lot of pressure in terms of selling cyclicals and all. We like buying stocks and holding them for a very, very long time, adding on to them as and when the conviction increases. We want to see that their margins go up, and they should be able to take market share from different other.
He put up like an interesting point. I mean, the sectoral thing, right? I mean, let's talk about 2008. Real estate went bust, right? But Ashiana and Poddar become 100 baggers and 2000 baggers or 1000 baggers. So one should be like, sectoral agnostic, because there could be a company, lying lonely and suddenly there's some developments happening, and bang, that could be the next multi-bagger or the next mega bagger that one craves and clamors about.
And so we've spoken about concentrated portfolios. How do you decide when to exit stock once you take it?
I mean, I have got a very simple thing. If in a normal market my company tanks by 35%, I'm done. I would be willing to exit, because I don't want to have that regret that okay, I bought something at 100, sold at 200 and I need to go into 20,000. I want to face the full cycle. Even if I lose like 35% top, it doesn't matter. What I have observed over the last 14-15 years, good companies won't be obliged or inclined to fall that much. They may correct by 10% or 15% or 20% under normal market circumstances. They won't be falling by say 30 or 35% or even a bit more. So that is more of my checklist, and hardly through the method of backtesting, hardly good companies like fell by 35%.
So has there been any stock which fell more than 35, you exited and went up?
Yeah, Kaplan Point was a definite example, but again, I mean, that was again, the cognitive bias or the recency bias that I can talk about. Kaplan Point was one of my largest multi-baggers still, made like 25x there. Bought Kaplan Point after after doing all the due diligence, bought at 62, and cause of some reasons, again I'm not going to name it, cause of some public forum reasons, someone had tons of followers and that certain someone, they said it's a shading company and one should be out. And Kaplan in a matter of hardly few days fell from 62 to 42. And I was like, okay, this has hit me, this has hit the 35% hurdle, so let me down. But I wasn't aware then that this was for some certain gentleman. But again, Kaplan was quick enough to recoup. It moved from 42 to 62 and I again, bought my full position. And it's a different ballgame now. Kaplan quotes at 3,000, adjusted everything.
The thesis behind this selling stuff is that a continuous compounding story, or story that has got long legs, won't fall by 30-35%, because stock market is a place where there are so many predators, smart people who would catch it, who are waiting for the opportunity to get into the story. So good stocks don't fall in normal market. Yes, if everything is falling, they also fall. So we don't want to be overconfident and believe that okay, our stocks can't fall. So if there's a 30-35% fall, then what we do is we are ready to buy it again if the opportunity is, but we want to question our thesis and sell it once.
So the reason that I ask is that we had interviewed Stallion Assets Amit Jeswani, and for him a stop was 25%. For you guys it is 35%. So what follows is that definitely you guys are in for the long haul, but you're very price sensitive too. And if and capital protection and profit protection is very high on your radar. Right. So if you're losing 1/3 of your value, of all the profits that you've done, then you're out of it.
That's an imperative feature that one should do, because stock market, as you mentioned, is filled with predators and insiders which have the abilities to smell beforehand. And it's in markets, it's not like stock price would move up and the events would follow, right? It's like the events would be there and the stock price in anticipation of that would be moving way faster.
And when you delve into a company, do you do any kind of spreadsheets? Do you forecast for 5 years, 3 years, 2 years?
No.
How do you track the company's progress?
I mean, I'm honestly not a DCF guy. We certainly don't know what's in store for the next 10 years, right? You put the terminal value from 0.5 to 2%, you adjust the exchange rate, and who knows, the whole ball game would get changed, right? So I'm more like a pattern-based guy. I do have the back of involution figure. I would always be in contact with the Scuttlebutt guys, the dealer distributors. And definitely, I love to be in contact with the guys that I'm betting my invest capital upon. So it's a mix of that. But again, no spreadsheet for shows. Because as Buffett grandfather said, if you can convince someone with a matter of 4-5 lines, that's fine.
Right. And so speaking of Scuttlebutt, how much do you really travel?
A lot. Because had we saved those monies and put in our multibaggers, would have been millionaires and billionaires.
But then we would not been able to find multibaggers. Right. That's also true.
Right. So in a period of say 60 days or 70 days, 30 days would move in like traveling and all.
And network helps. No doubt network helps. Like-minded people. See, stock market is a very small place where people who are doing it seriously, very, very few people. So you would know maybe everyone. So if you are trying to get some information about a particular product in a state or a city, you will definitely have some friends here and there, maybe tracking that company. And network helps big time in stock market.
Oh, see, Vinitji, like over the last 3 years, as I was mentioning, we have made like WhatsApp groups. We have cumulatively made 7 WhatsApp groups, and we have shortlisted each and every members. So, and they are boast the maximum number of members. 7 multiplied by 250 would be what? 1750. So we have got like 1750 guys. Selected guys with their profiles on, with the required due diligence on. Like we do due diligence in companies, we also do due diligence on humans also. It matters, right? So based on those 1750 guys, we exactly don't need anything else. Because each of the guys would have like huge amount of wisdom and experience.
Coming from different industries, different perspectives.
I hope you're not using Cambridge Analytica.
No, not really. And amidst all those groups, we have got guys like you. That is how we got connected, right?
Yeah.
So when we have guys like you, we don't need anything else, right? So that is the real world. The whole day would be, wasted or would be spent in talking to guys, companies. We need to take care of our relationship, right? That's it.
So the Scuttlebutt, the networking, and zeroing on stocks with extensive reading is the backbone of your multi-bagger success stories.
Mm-hmm. But again, for skilled guys, they may feel we would be ignorant about ratios and all. But definitely that is in our forte. We do understand ratios, we do understand ROIC or ROE or ROC and how to go about.
Sure.
In those 5, 10, 15, 20 companies, give them the space to breathe, right? Those ratios would fall after 2-3 years. I'm not bothered. It's all about managing the working capital cycle. If your cash conversion cycle is good enough, and if that is improving, if the promoter is hell-bent on making money for himself and the stakeholders, if he's committed, obviously money would get made.
So now you mentioned about promoter commitment,
right?
Sincerity to make money.
Right.
How do you judge a promoter's quality, his growth hunger and intent? So you did his background check on products and everything.
Right.
Next you would obviously be meeting with the promoter because you're putting a sizable stake.
Right. The first and foremost thing what we would do is we would be asking 1750 guys, do you know this guy? Have you got any idea? If yes, in 99% of the cases, someone or the else would have some idea. So we would be getting that feedback, we would be receiving that feedback, we would be doing our own diligence. Then based on the feedback received from the dealers and distributors, we would be punching them in some, say, Excels or in notepads or so. After glancing through all those, we would be doing a thorough study. And then at the last, we would be poaching the promoter. And by that time, we would be in a position to challenge the promoter. Okay, you can speak shit about it, but this is the real deal. This is the real thing. You can go on and on, but it hardly matters because we have done our study. So face us and answers us. If you are willing to do so, fine, we would be your partner in crime. Else we have got 5,200 or 600 other companies. Mm-hmm. Let's not waste each other's time.
And so you mentioned about riding stocks that would challenge the leader in the segment.
Right.
How do you get that conviction that you will this guy will you banking on will make be a market leader. Let's take the case of Havells because you mentioned that. And how you see, what were the things that made you think that Havells would turn out to be a market leader?
Havells is a very, very interesting proposition because I'm talking about Havells and we are moving back in the year of 2003 and 4. I mean, at that point of time, I was like starting afresh. So it so happened like I was moving to my uncle's place and it's a place called Kalna, my birthplace. It should be around 100 kilometers, 100 odd kilometers from proper Calcutta. So I was moving to my uncle's place and it was again a desolate, lonely place with nothing in. Communication would be a taboo there, communication would be a problem there. So meanwhile, I am a very inquisitive guy. Curiosity kills me, I am always curious to know more because that gives me the urge, that gives me the kick. So I was moving by the road and suddenly saw a glowing board and it struck me, it was of a company called Havells. Prior to that moment, I had absolutely zero idea of Havells. My home or even my friend's home, they had accessories or they had electrical appliances only of Crompton ribs. The Crompton ribs was, the only company that we could resonate, that we could relate to. So out of curiosity, I approached the dealer or the shopkeeper and I said okay, I am interested in this company. I am interested in your company because I am ignorant about it. Speak a bit more. Because then he said, okay, sir, we approached Crompton ribs for dealership, but they're different. They said you would need to comply with certain norms and stipulations which are very, very harsh on me. And they said, we are not bothered to move in your small town. So what I did was I moved on to Havells and they were very, very friendly to me. They gave that glowing board, they had that healthy credit terms and they were ready to support me. They will take care of me. And what struck me was, here is a company which is a leader, probably that has got complacent. If a tiny hole can sink the giant Titanic, the same thesis can work here too. Exactly that thing happened. On another day, I was actually glancing through the annual report of Havells and Crompton ribs. There was this stark difference. In one of the interviews, what Crompton ribs said was, we are the number 1 player, we are the number 2 player, we are the number 3 player, we are the number 4 player, we are the number 5 player. And there lies no competition ahead of us. So I was okay, this is it. Probably Havells may not be a Crompton ribs, but it can definitely be 10x more than what it was. And at that point of time, Havells had a market cap of hardly 100 crores. Crompton ribs has a market cap of 12,000 crores. Crompton ribs today, put together the merged entities, probably would have a market cap of 13 or 15,000 crores, and Havells has a market cap of 35,000 crores, right? So it's a very fascinating thing. And what I have observed over the years is the process is very repetitive. So if one can get the sense, if one can know and understand the process, that can well work on in due course.
And moving forward from equities, you have got a Sharebazaar app.
Right.
So how does that tie in with your investments?
See, it's since we are retired now, we should do some work, right? We feel like the retailers, we have got 3.1 crore Demat account, put together CDSL and NSDL. On a population of 130 crores, 3 crore is the stock market guys are the real minorities of India, right? So we wanted to present them the level playing field. I was okay, the smart guys, the predators, the so-called insiders, they have got all the knowledge in the world. We meet so many companies, we have got wisdom of 1750 guys. Why not put the coherent wisdom in simple lucid thing and present them in the app itself? So whoever downloads the app would eventually be in a point to come across or get aware of the happenings that is going on in front of a company or inside in a company. So that is how this.
So large cap stocks have newspapers and news channels to cover them. The data app are there in terms of different apps, or screeners are there. Price apps are there. What about the small caps? Nobody covers them. What about the AGMs? What about the AGM updates and all? So we thought, why not put it on a platform for the retail investors? And we have also been doing workshops. So we've done over 35 in last 3 years and met tons of retailers, and it's good to meet different people and connect to them.
Yeah, we didn't really know, 55,000 guys would be downloading our app in a matter of 6 months. 50,000 retail investors, because we don't project or present any foods for the, satoris or the traders. We really don't care foods for them. But as for the investors, the passionate investors are concerned, we are happy that they are enjoying the content, and with the cumulative wisdom of the 1750 guys, they would be fed with some amazing foods. If they can take it, well and good, else our efforts would always be there for them.
So from investments, retirement at the age when most people start their careers, and going on to education is a phenomenal journey, right? So what's in store going ahead?
See, Binitji, I mean, we must tell that this retirement thing, came from the thought process that, okay, people would be retiring at 60. And at that point of a time, their bodies won't be supporting them, right? So Las Vegas can welcome calling, but their life would be, dominated by pills or Ramdev Baba or Bhakti channels, right? So we wanted not only to make money, not only to create awareness, but to enjoy our life, right? So that is how this retirement thought process came. If you ask us what lies next, probably we would be numb now because we don't have a game plan. It's more like extempore. That is how the Sharebazaar, workshop happened. And who knows, maybe we would be doing some shitty, crazy stuff like we did through these hidden gems.
Absolutely.
That's extempore. Nobody knows.
So, Arun and Soumya, great having you on the show.
Thanks for having
And
us.
viewers get inspiration from the fact that a 15-year-old, as a 15-year-old and 15 years of experience and retirement at 30, it's only the stock market that can do for you.
Right.
Thank you.
Thank you.
Thanks a lot for having us.